The market opens at 9:30 a.m. sharp, but your edge is determined hours before the bell. While amateur traders scramble to their screens unprepared, professionals follow a systematic pre-market ritual that positions them to recognize accumulation zones and distribution patterns with clarity. Your morning preparation isn't just routine. It's the difference between reading the composite operator's intentions and becoming its victim. For example, before analyzing a single chart, the disciplined trader reviews overnight futures activity, scans for volume anomalies in key stocks, and mentally rehearses their trading plan. This structured preparation creates the mental framework to identify when smart money is quietly absorbing supply during morning weakness, the very pattern casual traders miss because they rushed into their day reactive and unfocused. The ticker tape will reveal its secrets only to those who approach it with a mind uncluttered by emotion, prejudice, or the day's petty distractions. I have observed thousands of traders over my career, and I can tell you with absolute certainty, the battle is won or lost before the opening gong ever sounds. Consider this fundamental truth. The market is a composite of human actions driven by hopes, fears, and calculations of millions of participants. To read this composite operator's intentions, you must first master the operator within yourself. How can you possibly interpret the emotional extremes of panic selling or euphoric buying if you yourself are ruled by these same destructive forces? The successful campaign trader begins each morning by establishing dominion over his own mental state. I personally spend the first hour of my day in quiet contemplation, away from the noise of the financial district. This is not idle time. It is perhaps the most productive hour of my entire day. During this period, I clear away the disappointments of yesterday's trades, the anxieties about positions I hold, and the temptations of opportunities I fear missing. You see, the untrained mind carries forward every loss as a wound to the ego, every missed opportunity as a source of regret. These accumulated emotions cloud your judgment, precisely when clarity is most essential. When you approach your chart still smarting from yesterday's stop out, you're not analyzing price and volume objectively. You're seeking revenge against the market. And the market, I assure you, cares nothing for your desire for vindication. The morning preparation ritual serves another critical function. It attunes your perception to recognize the subtle signals that separate manipulation from genuine supply and demand. Think of it as a musician tuning his instrument before a performance. Your mind is the instrument through which market phenomena must pass before becoming actionable intelligence. An untuned instrument produces discordant noise, an unprepared mind produces losing trades. I recommend a systematic approach. First, physical clarities, proper rest, nourishment, and a brief period of physical movement to energize the body. The connection between physical vitality and mental acuity cannot be overstated. I have never known a successful tape reader who abused his physical constitution. Second, emotional equilibrium. Take stock of your current mental state. Are you anxious? Overconfident? Distracted by personal matters? Acknowledge these states without judgment, then consciously set them aside. The market will exploit every emotional weakness you bring to it. Third, intellectual preparation. Review your principles, your methodology, your rules of engagement. Remind yourself of the foundational laws: supply and demand, cause and effect, effort versus result. These are your anchors when the market's gyrations threaten to sweep you into irrational action. Only after establishing this mental foundation should you turn to the charts and tape. Now, your observations will be clear. You will see accumulation where others see aimless wandering. You will recognize the spring that shakes out weak holders before the markup phase begins. You will read the volume spread with precision because your mind is calibrated to receive these signals. The amateur rushes to his screen, coffee in hand, emotions unexamined, ready to react to whatever the market throws at him. The professional has already won the day's most important battle, the one within himself. The novice trader believes the market begins at the opening bell. How tragically mistaken. By the time the exchange floor erupts into its daily frenzy, the large operators, those I call the composite man, have already positioned themselves based on information gathered during the quiet hours when amateurs sleep soundly, oblivious to the chess moves being orchestrated against them. I make it my sacred duty to study the overnight tape, the foreign market action, and the pre-market indications with the intensity of a military general surveying the battlefield before dawn. Why? Because smart money leaves footprints, and these footprints are most visible when the crowd is absent. Consider what transpires between the closing bell and the next morning's open. London traders react to our previous session. Asian markets digest overnight developments. Futures markets, those magnificent barometers of institutional sentiment, reveal where the large interests are positioning their capital. These are not random fluctuations. They represent calculated moves by those who operate with superior information, deeper pockets, and longer time horizons than the general public. Let me illustrate with a recent observation. A prominent industrial stock closed weak on heavy volume, the kind of action that sends the uninformed scrambling to sell at the next morning's open. But what did the overnight futures reveal? Steady accumulation. What did the pre-market action show? Professional buying absorbing every share the frightened public offered. By the time the opening bell rang, the composite operator had already accumulated a substantial position at favorable prices, while the amateur trader was preparing to sell into precisely this engineered weakness. This is the essence of the game, gentlemen. The market is designed to transfer wealth from the impatient to the patient, from the uninformed to the informed, from those who react to those who anticipate. Your morning reconnaissance must be methodical. I personally examine the overnight range in the index futures. Has there been expansion or contraction? Where has volume concentrated? Are we testing previous day's support or resistance levels in these extended hours? These questions reveal whether accumulation or distribution is underway before most traders have finished breakfast. Next, I scan for individual stocks showing unusual pre-market volume. Volume is the fuel that drives price movement. When I observe substantial volume transacting away from the previous day's closing price during pre-market hours, I know the composite operator is active. The question becomes, is he accumulating in preparation for markup or distributing into strength before markdown? I also study the relationship between price and volume in these early hours. Heavy volume with minimal price movement. Absorption, someone is taking every share offered without pushing price higher, a classic sign of accumulation. Light volume with exaggerated price swings. Manipulation, designed to shake out weak holders or attract uninformed buyers. The international markets provide additional context. If European shares in similar industries are showing strength, while our futures remain subdued, someone is suppressing price domestically to accumulate before the inevitable catch-up move. By the time I approach my first trade of the day, I have already mapped the probable intentions of the large operators. I know where they are likely testing for supply, where demand is concentrated, and which price levels represent genuine support versus temporary manipulation. The crowd arrives at 9:30 a.m. and immediately begins reacting, buying breakouts, selling breakdowns, chasing momentum. Meanwhile, I have spent 2 hours studying the composite operator's preparations. Tell me who possesses the superior position. I have never, and I mean never, witnessed a consistently profitable trader who operates without a definite plan of campaign. Yet I observe daily the wreckage of those who approach the market as gamblers approach a roulette wheel, hoping for favorable outcomes through sheer luck or intuition. This is not speculation, this is suicide. Before I risk a single dollar of capital, I have determined precisely where I will enter, where I will exit if proven wrong, and where I will take profits if proven correct. This plan is constructed in the calm rationality of the morning hours, not in the emotional tumult of active market conditions. Why? Because sound judgment evaporates the moment your capital is at risk. Let me be explicit about what constitutes a proper trading plan. First, I identify the specific price levels where I expect to find either supply or demand based on my analysis of the previous session and overnight action. These are not arbitrary numbers plucked from hope. They represent logical points where the composite operator has previously demonstrated interest through volume and price behavior. For instance, if I observe a stock in an accumulation phase, I mark the lower boundary where absorption has occurred consistently. This becomes my testing point for demand. I also note the upper boundary where supply has repeatedly appeared. These boundaries define my battleground for the day. Second, I predetermine my stop-loss position with mathematical precision. The stop must be placed where, if reached, it proves my analysis incorrect, not merely where it becomes emotionally uncomfortable to hold the position. Most traders place stops where they can no longer tolerate the pain. I place stops where the market structure itself has been violated, invalidating my original thesis. Third, I calculate my position size before entering the trade, based on the distance between my entry point and my stop-loss level. This is fundamental risk management that separates professionals from amateurs. If my stop is 5 points away, I size my position such that this 5-point loss represents an acceptable percentage of my total capital, typically no more than 2%. The amateur asks, will this stock go up? The professional asks, at what price level does accumulated evidence suggest demand will overcome supply? What is my risk if I'm wrong? And does the potential reward justify this risk? Without this blueprint constructed in the morning's clarity, you become a leaf blown by every wind of market movement. You will exit good positions prematurely when shaken by normal volatility. You will hold losing positions too long, hoping for reversal. You will chase price movements emotionally rather than executing strategically. The plan removes emotion from execution. When price reaches my predetermined level, I act regardless of whether I feel confident or fearful in that moment. The connection between bodily vigor and mental acuity in trading is vastly underestimated by the majority of market participants. They treat their physical constitution with utter neglect, then wonder why their judgment fails precisely when clarity is most essential. I speak from hard-won experience. Early in my career, I subscribed to the foolish notion that trading was purely an intellectual exercise, that the mind could function independently of the body's condition. How wrong I was. After experiencing a series of costly errors during periods of physical exhaustion, I recognized an undeniable truth. The tape reader's instrument is not merely his intellect, but his entire organism. Consider the demands we place upon ourselves. Reading the tape requires sustained concentration over many hours. We must simultaneously track price movements, analyze volume characteristics, recognize patterns emerging across multiple securities, and maintain emotional equilibrium amid capital risk. This is extraordinarily taxing work, demanding peak mental performance throughout the entire trading session. Yet how can the brain function optimally when the body is depleted? When you arrive at your desk already fatigued from poor sleep, clouded by inadequate nutrition, or sluggish from physical inactivity, you have handicapped yourself before the battle begins. I now maintain a rigorous morning physical routine. A brisk walk in fresh air, 20 minutes of calisthenics, a proper breakfast. These are not luxuries but necessities of the profession. The increased blood circulation sharpens mental processes. The physical movement disperses nervous tension that would otherwise interfere with objective analysis. I have also observed that proper hydration throughout the trading day maintains cognitive function. Dehydration, even mild, impairs the very judgment and reaction speed upon which profitable trading depends. Similarly, I avoid heavy midday meals that induce drowsiness during the critical afternoon session. The composite operator never sleeps, never tires, never loses focus. To compete against this formidable adversary, you must bring your complete faculties to bear. Your body is not separate from your trading success. It is foundational to it. The trader who neglects physical conditioning is like a general who sends exhausted troops into battle. Defeat is not merely possible, it is inevitable. Respect your physical constitution, and your mental performance will reward you with the clarity necessary to read the market's true intentions. The human mind is a magnificent pattern recognition machine, but only when trained through disciplined repetition. I have spent decades studying the market's rhythms, and I can assure you the ability to instantly recognize accumulation, markup distribution, and markdown phases does not emerge from sporadic effort. It is forged through unwavering consistency. When you approach the market with the same systematic ritual each morning, you are training your perceptive faculties to detect the subtle signatures of the composite operator's intentions. The first dozen times you review overnight action, scan for volume anomalies, and study support resistance levels, the exercise feels mechanical. By the 100th repetition, patterns begin emerging from what previously appeared as random noise. This is not mysticism, it is neurology. Your brain creates pathways through repetition. Each morning you spend analyzing price-volume relationships in the same structured manner. You strengthen your ability to recognize these relationships instantaneously during market hours. I can now glance at a chart and immediately identify whether we are in preliminary support or a genuine accumulation zone. I can distinguish between a spring, that violent shakeout before markup begins, and authentic distribution. This expertise did not arrive through inspiration. It arrived through thousands of mornings following the identical preparatory routine. The inconsistent trader develops no such mastery. One day he rushes to his screen without preparation. The next day he spends hours in unfocused chart gazing. His mind never calibrates to recognize the market's recurring patterns because he provides no consistent framework for pattern formation. Your morning ritual is not about today's profits. It is about building the perceptive capability that will serve you for decades. Each consistent morning is a deposit in the bank of expertise. Miss that morning preparation, and you withdraw from that account. The composite operator operates with mechanical precision. Match that consistency with your own, and eventually you will read his intentions as clearly as words on this page. Gentlemen, we have covered considerable ground this morning, and I trust the central thesis is now abundantly clear. Your trading results are not determined by what happens between the opening and closing bells. They are determined by what happens before the market ever opens. The composite operator, that great amalgamation of organized capital and strategic intent, possesses every advantage: superior information, deeper resources, and the ability to move markets through coordinated action. Yet there remains one arena where the individual trader can achieve absolute parity with these formidable interests: preparation. While you cannot match their capital, you can match their discipline. While you cannot access their privileged information, you can observe their footprints in overnight markets and pre-market activity. While you cannot move prices at will, you can position yourself to recognize when they are doing so and for what purpose. The morning ritual I have outlined: mental preparation, pre-market reconnaissance, strategic planning, physical conditioning, and consistent execution, represents the foundation upon which all successful speculation is built. Remove any single pillar, and the entire structure becomes unstable. I have watched brilliant minds fail in this business because they lacked emotional control. I have seen diligent researchers lose fortunes because they ignored pre-market signals. I have observed physically vital individuals make catastrophic errors due to poor planning, and I have witnessed the tragedy of talented traders who approached the market inconsistently, never developing the pattern recognition that separates professionals from perpetual novices. The choice before you is stark and unambiguous. You can continue approaching the market reactively, stumbling to your trading desk unprepared, emotionally unbalanced, physically depleted, and strategically confused. The composite operator eagerly awaits such participants. They provide the liquidity he requires to execute his campaigns profitably. Or you can join the ranks of those who treat trading as the serious professional endeavor it is. You can construct a morning ritual so systematic, so comprehensive, that by the time the opening bell rings, you have already achieved the mental clarity, strategic positioning, and physical readiness that most traders never attain. Remember this immutable law: the market rewards preparation and punishes improvisation. Every dollar you lose through emotional trading, every opportunity you miss through inadequate analysis, every stop out you suffer through poor planning, these are not the market's fault. They are failures of preparation. Your morning ritual is not separate from your trading, it aids your trading. The analysis, the planning, the mental conditioning, the physical readiness, this is where profits are actually generated. The execution during market hours is merely the harvest of seeds planted in those crucial morning hours. I challenge you to commit to this discipline for 90 consecutive trading days. Construct your morning ritual with the same precision you would apply to analyzing a stock chart. Execute it with the same consistency the composite operator brings to his campaigns. Document your observations, refine your processes, and watch as your ability to read market intentions transforms from hopeful guessing into reliable expertise. The path to trading success is not mysterious or complex. It does not require genius, luck, or privileged access. It requires only what every human being can provide: consistent, disciplined preparation before the battle begins. The market opens at 9:30 a.m. sharp, but your advantage or your disadvantage has already been determined by 9:29 a.m. The choice, as always, is yours.